Welcome back. Well, there are growing calls for financial regulatory bodies to better monitor financial institutions. Follows Standard Chartered admission that it manipulated the South African rand. The bank has been fined 42 million rands for the misconduct. Joining us now for analysis is Craig Stoer, General Counsel at Yellow Card. Great to have you on the show.
Nice to be here. Thank you very much.
So in light of the alleged manipulation of the rand by banks in South Africa, how can customers be more in control of their finances and potential impacts?
Yeah, well, I think, look, to start out, I'm not the expert on South Africa. I see what's happened there and in a number of other places, right? It's not new. We've had LIBOR scandals. We've had Forex manipulation in the United States and things like that. But I don't think that any of this has necessarily made consumer assets, right, less safe. You see that these banks that have in the past been fined and paid penalties, right, are still in business. Their customer deposits are still safe. So I think from a consumer standpoint, I don't know that I'd be that overly concerned about it. Of course, from a competition commission standpoint and a regulatory standpoint, I think there's different issues there.
Are there risks in digital finance? We're potentially seen in traditional finance banking systems now. Are there any risks to digital financing, and are there ways to mitigate this risk at this time? Because, going by what we're seeing right now with traditional finance, we're also seeing problems with digital finance. How can we mitigate this risk?
Well, certainly you've seen, right, in the crypto space, you've had, right, FTX, you had Binance this week that just paid record fines in the United States. But I think, the risks, in my opinion, are the same right across the financial services sector. If you look at money laundering, people like to say that money laundering, that digital assets are all about money laundering. Well, the fact is that somewhere the estimate by the UN is between 800 billion and $2 trillion a year it goes through money laundering illicit activities. And only a fraction of that, about 20 billion, if you look at the Chainalysis report, relates to digital assets. So I think, this is a problem for the financial system as a whole. In my opinion, you ask what can be done about it. I think more regulation in the digital asset space. You see there's been regulation, right, in the traditional sector for decades. Money laundering hasn't gone away, but the only way you can get at it, particularly in the digital asset space, is to regulate it and regulate it appropriately.
Can you comment on how banks, play into currency manipulation, and does the decentralized nature of stable coins discourage manipulation?
I don't know if I want to call it manipulation, but right, these banks have large trading departments, and traders, right, are business people looking to make money on the spread. And sometimes, as we've seen, maybe they're doing that with a type of collusion that isn't permissible nor good for the markets. Certainly, stable coins, obviously the stable coins that are pegged to the US dollar, give you, I think, a bit more of a security. It's tied to the dollar peg. I think we've seen in our business, in fact, the bulk of our business is all about stable coins. And we operate in 20 jurisdictions in Africa, including South Africa. And most of our customers are all about real world use cases, right? They're storing it, using it as a store of value. They're against depreciating currencies. They're using it to make transactions and to try and get away from the World Bank average of 19% fees on intra-African remittances.
All right, looking at what happened this week with the Binance Exchange, that's the biggest exchange globally at this time, with CZ, the CEO, stepping down. How does this impact the crypto market, going forward? And knowing that this is still a developing story at this time, what else are you still expecting?
Well, I think as you saw, the price of Bitcoin actually rose. I think it was, even though they're record fines, I think for the industry, it was, I would say, almost a bit of a relief that they had entered into an arrangement with the various regulatory agencies in the U.S., right? They are paying record fines. If you read some places, Binance had set aside $8 billion in potential fines and penalties. They paid 4.3. And this has been an ongoing investigation, I think, by the various U.S. agencies since 2017. So I think what you've seen with Bitcoin and the price actually going up, I think that people are relieved that this is settled and that the world's largest exchange, seems to still be in business and has made a lot of money over the years. So I would anticipate that financially they're still quite strong.
All right, so definitely we're seeing investors quite relieved at this time, but other players in this market, do you think regulators are going to come down harder on others trying to do business right now in the crypto industry?
I do indeed. I think if you look at what happened there, right, I think 3.4 billion of that fine was to U.S. FinCEN for money laundering. Another 968 million was for violation of OFAC sanctions. At least what's come out in the press doesn't seem like the compliance team there was taking their responsibilities seriously. The chief compliance officer was also fined. They've placed a monitor or have an order for a monitor to be placed at Binance. So definitely the United States is very serious about this type of activity and following the sanctions and money laundering laws. And I think you'll see other similar regulatory agencies, in Europe and throughout Africa, probably be a lot more strict and scrutinize these. And this is one of the reasons, quite frankly, I think in a lot of places, right, digital assets aren't regulated. A lot of places that we work, and we always try and work with regulators saying that it should be regulated. It makes it safe for consumers, and that's really one of the primary objectives of the agencies, right, is to make things safe for consumers, to make sure that funds are segregated, and to make sure that the compliance program is adhering to various laws and regulations.
All right, we'll leave it there now. Thank you so much for coming on, Craig Storer, General Counsel at Yellow Card. It's great having your perspective today.
Thank you very much.